The discussion forward. We've got Peter McGuire, CEO at AustraliaTrading.com, also joining in on the show right now. Peter, hi, good evening. Thanks for taking time out as always. This output hike, Peter, by OPEC Plus of 411,000 barrels per day and for a third consecutive month now. Do you think it's on expected lines, and do you think the market has already factored in this additional increase?
Well, good afternoon, Aisha. I think a couple of things. First off, yes, I feel as though that's probably been worked in as far as price, but I wouldn't be surprised to see even further downdraft as far as price over the next, say, month or two as this starts to really take hold. The other thing has got to be, and we've got to be mindful of it from a compliance side. You had overproduction coming from the likes of Kazakhstan and Iraq. So that needs to be looked at as well. And I feel as though the fabric of it is very much, this is the roadmap over the next couple of months and maybe even up to November, that next meeting. So I would expect there to be, as the months roll forward, probably this will be even increased come, say, September, October.
To come to that, because the next meeting for OPEC Plus is scheduled for November 30th. But before that, will it be fair to rule out possibility of further output hikes, Peter, or is it just another output possible over the next few months, you think?
I think further output hikes, and the reason for it, Aisha, is that there seems to be a little bit of a race to the bottom as far as not only price, but they've also got the relationship that President Trump has now with MBS. It's really cemented that a unification. And I feel as though that you're really going to see probably the tariff situation start to right itself as the months wear in. And the other side of it, of course, President Trump wanting to actually produce more oil. So I think there's going to be more supply coming on globally, and that in turn is going to be great for consumers, the countries like India, of course, and very good for inflation.
So by when do you expect the full unwinding of the 2.2 million BPD to be completed, Peter?
Well, I think that's a little bit of the unknown, and I wouldn't be surprised that happens over the next couple of months. We've got to see how that really takes hold, because one, they can have these targets, and then they naturally allow the body of OPEC Plus to come out with a number, and then that's going to be worked through. And then the other side of it, of course, is do you see any unknown unknowns into the market from weather outages, what happens as far as geopolitical, all of these situations, again, can have an impact to the market as far as production. So I feel as though that will work through the market pretty much over the next couple of months, Aisha.
Right. So it brings me to now the prices. Given this latest development, will it be fair to say, Peter, that oil will continue to be in a range of $60 to $65 per barrel in the short term, or do you think there is a possibility it could slip even below 60?
Yes, I do think so. I really do think that WTI 55 will be the handle to really keep a very close eye on, probably 58 to say $60 for Brent. I feel as though on the downside, should it break that number, there are many analysts out there, Aisha, saying it's going to be sub 50 come, that September, October sort of timeline. We're 1st of June tomorrow, as we know. I want to get through the next 2 months and really get an appreciation what's going on with the tariffs and other geopolitical concerns, the Russia situation with the Ukraine and so on. So there's a lot of, as they say, a lot of water to pass under the bridge yet until we get a real indication. But I think it's going to be better than worse. Better for consumers. And if you're a producer, well, maybe, they're going to have a bit of a tough time.
Right. Last time when the surprise output hike was announced, OPEC Plus attributed it to a stronger oil demand. Was this, in your opinion, the sole reason for the output hike this time too, Peter?
I think there's a number of key points, though. I think that we're in a differing world very much over the last couple of months with the Trump administration and the relationship that he's forged and really cemented with MBS. And that was demonstrated in that recent visit to Saudi and, of course, to UAE and to Doha. So I think that they're all components that are going to make the oil market, I feel, more. How would I classify it? I would say more easier to work through. The whole process, I think, is going to be cheaper prices and more production over the short run. And that will take us pretty much till the end of the year, I'd say, Aisha.
Peter, lastly, there's also an increasing concern that within OPEC Plus, select group members, the likes of Kazakhstan, Iraq, and Russia, are not respecting their
Yeah.
production quota. What do you have to say about that?
Well, that's always the issue, as we know, from a compliance side. And compliance is very delicate because you've got certain countries, and as you have highlighted there, the likes of Iraq and certainly Kazakhstan and Russia to some extent, that these are the outliers. And this is always an issue as far as compliance. And that was all the meetings that I've attended over the years in Vienna. And this is a virtual meeting we're having today, but when you're there, you understand the framework of it. And this is where, the Secretary General would always, I suppose, have a curt, discussion as far as, compliance. Then countries that aren't complying, they will naturally have, some heavy-handed words said to them, and they want to see compliance across the fabric of OPEC.
Right. Okay, interesting development here. But Peter, thank you so much for your time today.
Thank you, Aisha.
Okay, and